As markets continually ebb and flow, one of the most important skills in trading is being able to define when a major low is in. We will also be going over in this video something a little bit more fun as to when that might actually happen. With that said, welcome back to EllioTrades channel. I'm your host Krown again today with some good old TA. And this video is going to be a skill video similar to last week actually, where we spoke about how to define major market highs, of which about a day or two later, we got exactly that. And this is going to be the opposite but equal video for defining major lows. And we'll also go over when potentially it would make sense to actually expect this, like for a timing narrative. I should also let you know that I have my own channel. There is a link in the description below. And one of the reasons why I want to record this video as a skill video is because I do not know when I'll do the next video, Bitcoin video on this channel. So I want to give you the tools so that in case you are not subscribed to my channel and you're not watching, you're not getting that daily Bitcoin analysis, that you can just see it right here and have it for yourself. Okay, great. So let's start off with the fun thing first. When low, not how, but when, as I think that there's something relatively fun to be looking at over here. We spoke a bit about this very briefly yesterday. And today I want to give it a little bit more focus because I actually wanted that to be the focus of yesterday's video, but I guess the titling and everything and it kind of got I guess a little bit different there. All good though, of course. And more importantly, what am I talking about? Well, there just seems to be some sort of weird thing about the third Friday, the end of the third week of the month for Bitcoin specifically. All of these vertical lines represent around the 20th of the month. Now, the 20th of the month or around the 20th of the month means, plus or minus a day or two from that date. However, looking at this right here, you will very quickly see that all these vertical bars align mostly with major lows, and some of them, well, not some of them, but one of them aligns with a major high. That one being actually last October 21st right here, actually. That was the high, so to speak, before a nice big meltdown move from 66 down to 56, a $10,000 move right there. That was the only one that's actually been a top in the past year, actually, now that we go back down here. Anyways, the one before that in September was on the 21st right here. Now, as you can see, Bitcoin did chop around that low, but that was our last major and even macro low. Very important before rallying up about almost 30,000 bucks. Not bad, you might say. What do we have over here in August on the 20th? A nice spike low right there. It doesn't look like much on log scale, but rest assured, this was a almost $10,000 move from 44,000 to 53,000 just a few weeks later. What about the time before that? In July, of course. Well, that was our mega massive bear trap on the 20th and 21st before going up, well, from 29 all the way to 53. Not bad, you might say. Okay, what about the time before that over here? That would be the 22nd of June. So again, a little bit of around that 20th of the date of the month. But again, a $10,000 rally from low to high, as we do see it go from 29 all the way to almost 37 right there. That is close to 10,000, I should say. Still a rather impressive rally on a $30,000 number. Anyways, the time before that was the last major massive meltdown on the 19th and 20th of May. Bitcoin did rally up almost immediately from 30,000 to 42,500. So about $12,500 rally right there. Not bad. Of course, right here, this is April lows. This is your March lows. This is not necessarily your February lows because this happened on the 27th, I believe. I mean, we did get a spike down on the 22nd right here, but I'd say that's a little bit too far out of reach. And then, of course, one before that was January over here, January 22nd on that spike low, and December 20th right here on this spike low. And then, of course, November, well, a little bit out of an outlier there as well. Anyways, of course, we are currently coming into the 20th of this month, just 2 days away. And as we've seen in the past, somewhere between the 19th and the 22nd is where this typically does occur. Now, do I have an explanation for this? So again, I come from traditional land. I used to be a market maker, authorized trader on the floor of ARCA. And one of the explanations that I could maybe postulate here is that the third Friday of every month is what's called the regular expiration for equity options. And the reason why that's important is because it's typically the highest volume and the most traded expiration for that month. And there's a lot of big portfolio rebalancing going around that date specifically. So people are rolling their positions to the next month or the next expiration that's relevant to them, or they're, just reorganizing their portfolio, whatever it might be. There's a lot of action pivoted around those expirations. That would be my explanation for it. Now, does that follow for Bitcoin? Kind of not. There's not a huge options market in Bitcoin, but the people who do play the options market certainly have the power to move the market in Bitcoin, from what I understand, from what I know. Anyways, we'll get off that topic for right now. That was just a fun little thing to begin with. So let's get on to the bulk of this video. Now, again, this is more like when. Let's talk about now how. What are we looking for on a major low? Okay, so first things first. Remember last week when we spoke about bearish divergence on the daily RSI? Well, we got that just about a day or two after the video, and that was your high right here, confirmed on the 9th and 10th, and then down we go. So what are we looking for on the other side? We're looking for the opposite but equal indication of that, which is called bullish divergence. Now, this can come in two forms. There's both hidden bullish divergence, or what should be known as continuation divergence, and regular bullish divergence. Regular bullish divergence only comes within the context of a downtrend. Hidden bullish divergence only comes within the context of an uptrend, and they both come on local lows. Don't let that confuse you. Don't let that scare you. You don't need to know exactly what I'm stating right there. What you need to know is how to identify it, or at least one facet of them. And it all comes down to what we're looking at here on the RSI. Remember, we're looking for a divergence between price action and the momentum oscillator. And I want to give you the underlying understanding of this, not just telling you like, look for this, because it's going to be better to know that, basically is what I'm trying to say. And so what are you essentially looking for? Well, in this case, we are in a downtrend, or we're not necessarily in a downtrend, we're not necessarily in an uptrend. We have lower lows, but we do not have lower highs just yet. So it could be an emerging downtrend. But it's kind of in limbo right now. Anyways, what does that essentially mean for what we're looking at right here? Well, most importantly, we are looking for a loss of momentum to the downside. So that would imply that Bitcoin comes down, makes another low or two, and then we do see, if we're going to see bullish divergence, a higher low on the RSI. Now, the higher term time frame that we see this on, the better and the more likely it is to be a major low. Now, that doesn't necessarily have to be on the daily right here. You'll notice we did not have bullish divergence over here, although we did have it on the 12-hour, for example. You'll notice if I go down to the 12-hour, on our last major low, that was in September, by the way, on the 21st as well. What do we see? We do see an ever so slight amount of bullish divergence right there, as Bitcoin did make an ever so slightly lower low, and the RSI also made a higher low. So again, price action closed lower, and it only matters on closes, by the way. So price action closes lower, and the RSI oscillator is making a higher low, ever so slightly right there, but that is completely fine. And that is what we're looking for, because it suggests that there's a loss of momentum to the downside, and thus we are looking for a bit of a role reversal right there. In this case, then we go off of trend, we pick out the last local high, which is right here, and as soon as it takes that out, well, you're not always gonna have a result like this, but that is, you're essentially looking for some upside after that. Okay, beautiful. Should we pick out one more example? Yes, we can certainly do this. Let's go to the last major, massive macro low that we had, which was back in the summer. And what do you know, throughout this whole grind down, and this took, months, remember, from May to July, but this whole grind down from in the $30,000 territory, whilst Bitcoin was closing on lower lows, we were making higher lows on the RSI the whole way through, especially this one to this one. And that was this low over here and this low over here, massively closing lower lows, but massively higher lows on the daily RSI. As of right now, we are in no way, shape, or form making bullish divergence on the daily RSI, but like I said, you don't need to see it on the daily. Even seeing it on the 12-hour or the 6-hour would be enough for me. And right now, it is starting to show itself a little bit, but we still have some work to do. So while I do think that Bitcoin's very likely to bounce off this region, similar to yesterday, which by the way, the 6-hour very well could put it in right here if you do confirm a local low, as you are going to see a higher low on the 6-hour RSI. I do think that Bitcoin very likely bounces from here. Now, with that in mind, I would not call this a major low and say that Bitcoin's out of the woods, similar to yesterday's video, until Bitcoin is back above $65,000 on a daily closing basis or a 12-hour closing basis. If it can do that, yep, it's all good in the hood once again. And I am going to be talking about all sorts of fun upside targets. I don't know about this. I don't know about the plan B targets by the end of the month, but, you know, and I have a lot of respect for him, but, well, maybe in like the next few months, not necessarily in the next couple of weeks. I think that's a little bit aggressive for myself, and I tend to err on the side of conservativeness when it comes to trading. Anyways, so that is the first way and one of the most powerful ways. Let's go over a couple more interesting ways as well. Okay, another classic way of where to look for on your higher lows, and you might not like this one as much, but a very, very good way in this case is to go to your higher term timeframes. We could go to a daily or a weekly. Apologies for the doggies outside. We're dog sitting a couple of Pomeranians, and they're quite excited right now. Anyways, what do we see over here? Well, we can pick out the last major highs on this trend, and we expect those to be respected, and for those, if tested, to put in another higher low. And in this case, where do we see the last one at? That would be about $52,000 in this, what I'm going to make as a blue box right here. Also, you'll notice is directly in line with the weekly yellow 21 exponential moving average. Why is that important? Well, just so happens to be that Bitcoin seems to love that throughout its history. And I'll actually just briefly show you this right here. Just one of those weird things that tends to work. But in Bitcoin's bull markets, it tends to, well, not just come down to it, but give some amazing entries on it. And in Bitcoin's bear markets, it tends to give some amazing entries for shorts on it as well. Now, the way to kind of look at this, if you already, you're probably already figuring this out, is that if price action is above the yellow 21 on the weekly and it has a positive slope, so both of those things are very important on an open and closing basis, generally bullish, generally macro bullish trend. You see it get all the way up here, breaks it right here, boom, down, regains it right here, keeps you long all the way to, top of 2013. Same thing over here, regains it all the way to 20,000. Same thing over here, 4,000 to 14, more recently from 8,000 to 65, and then we regained it recently at the low $40,000 territory. So Bitcoin did come back down around there. Not only would it be a test of your prior major high, but also the yellow 21 right there. And we just know historically that Bitcoin tends to like that one. So Bitcoin did come down around there. I would quite like it as well. Again, I am not saying that Bitcoin is destined to come down to 53,000. I am actually only looking for Bitcoin to come down to 53,000 if and only if Bitcoin does close on new lows out of this consolidation range, meaning we need to see like a 12-hour or daily closure below about 58,500. If we see something like that, or 58,000 if you want to be super conservative, then yes, I do start to look towards 53 or 52,000 bucks, with very likely a bounce along the way at 55 or so. Okay, beautiful. So that one's rather simple, rather easy. And let's get into another one that should naturally have confluence with that. Or what I should say is that if it does have confluence, it's very likely that's going to be a strong bottoming area as well. And it's going to be this. It's going to be the good old Fibonacci's here. So what I'm going to do is I'm going to draw a bullish retracement for the Fibonacci's. And I just want to see where major things come in at. And that can, give us an idea of where we're at in the grand scheme of things. So how do we do this? Okay, we go in the direction of the trend. So that means in an uptrend, we start low. So we start from the last major low, which is going to be here at 40,000, and we end high, and we go from bottom to top. And now I only have 3 of my levels here. I happen to think they're the 3 most important ones, to be honest with you, but fair enough. Anyways, what do we see right here? Or did I get this right? Yes. Okay, well, let's actually get this exactly right there and exactly to the high right there. Okay, beautiful. All right, so the rule with these is, the general rule I should say, is that your 382 Fibonacci retracement is where you expect to retrace in a very strong uptrend. That is still okay. And guess what? That's pretty much where we're at right now. Yes, it's a little bit lower. You can see that we more officially tested it on the 28th of October lows. But again, coming into this region would be considered kind of another test of it essentially. And again, I do think that Bitcoin probably more likely to bounce off this area first, probably into the mid to low $60,000 territory. And then, hey, if it does retake 65, there's no more talks, or at least in my opinion, there's no more talks of relevant downside right now. Anyways, if this area is to fail, where's the next big one? The 0.5, which is right around $53,000, which is interesting now, isn't it? Because that is exactly where our last major high was. And then below there, we have the 618. So the 618, if you do retrace around there, it's an extremely strong bounce area. However, I do start to get a little bit more concerned that the trend is actually in a macro reversal if we get down around there in comparison to the 382, which is where you do expect only a very strong uptrend. So below the 618, usually going to see a macro reversal right there in this case, or we're going to see like a big downs after that, to be fair. Anyways, let's get into the last one. I realize that this video is already quite long, but I do think that it's rather important, and it is something that's actually relatively simple, and it's this. Well, it's all of these white lines. No, what do they all have in common? They all are going off of this indicator right here called the PMARP. I'll show you my settings very quickly. If you type in on the Trading View Indicators tab, PMARP, it'll pop up. It's by Caretaker. He's a good friend of mine, and these are the settings that I'm running right here. And by the way, just make sure that it's on price moving average ratio percentile. Basically, this is telling you in a percentile format how far away current price action is away from those user specified moving averages, of which I'm running a volume weighted moving average right there. Anyways, I've marked off these horizontal, or sorry, not horizontal, again, American, my education not great, but vertical bars alongside all tests into these two green horizontal bars right here, which are very low. And all of these have been, as you can see, some pretty amazing and lovely lows for Bitcoin. Going all the way back to 2020 right here. And we could obviously do more. We could obviously do, this last one from the flu dump, if you will. Anyways, I won't say the real word there because YouTube doesn't like that one, but all good. Anyways, you can eyeball this yourself, but all these were major lows. And what's interesting right now about price action is that we are just getting into the top portion of it. Now, of course, do we typically see it on the extremely major lows come a little bit lower than that? Yes, we do. But once we get into this green territory right here, it is time to be looking for a major low, most likely. At least the probabilities are on that side. So the longer that Bitcoin does chop around this $59,000 to $60,000 territory, the more and more this will actually inevitably come into the bottom end of that. And this will start to look like Bitcoin is very likely bottoming within this region and not going to trade lower. If Bitcoin dumps out basically between now and Sunday, then probably going to see like $55,000 and try for a major low right there. I am actually still of the opinion that Bitcoin has a chance right here. And again, what would make me not just from my personal opinion, but as a trader and technical analyst, where do I essentially just say, hey, this is not just a major low, this is the low that you're looking for. Again, it's back above $65,000. That is a critical area, just this last little high right here, technically a little bit above there. But that would be where we can start to talk about, I refer to them as plan B targets once again, not necessarily in the same time frames, or at least I wouldn't feel comfortable saying that. But I hope that this video is both relevant and hopefully digestible for you. I realize it's getting a little bit too long now, but I thought that it was an important one, as it's important to have these tools so that you can decide for yourself. And I believe with that said, it is time for me to sign off. I'll see you in the next one. Take care.